Hey, okay, so this is Euro USD, and usually what I love doing, or what I usually do, is I usually start from the higher time frame. And what you can see from the screen is this is the monthly time frame of Euro USD. And what do I usually mark up? I usually mark up the previous monthly high, right? So I start with the monthly high to share, then the monthly low, because I know this is what the market could rally to either way. So this, the liquidity is above the previous month's high, previous month's low, or the weekly high, the weekly low, or the previous day high and low. Those are the major liquidity pools that maybe make the market move. And we can see we have a fair value gap over here that is left open. So somehow this can be more of a stronger, but also you can see we are in close proximity to the previous month's low. So having this from the monthly time frame, what I can do next is refining, right? So let me have it labeled there. So we have PMH top right, and also we have the PML, the previous month's low, so bottom right. Yeah, so we have the two arrays that are either, if the market is going higher, it will reach for the previous month's high, and if the market will be dropping lower, the market will be reaching for the previous month's low. So having the two levels marked up like that, then the next thing is trying to refine from the lower time frame. So we drop onto the weekly time frame to see where is the market likely going to. Is it going for the previous month's high, or is it likely that we might be going for the previous month low? So I don't know, my network is stubborn, was getting out of noise, but seems network isn't responding. It's okay. So from the weekly time frame, here we have the previous month's high and the previous month's low. So if we can do a bit of refining, ensuring that everything is at a level where it is specifically. So if the market needs to go higher, remember this is the level we can maybe expect to see a sting into. Maybe then we have a continuation higher, and if the market is going lower, we'll be watching this previous month's low. And from the weekly, what we're seeing is last week we did expand higher, then we rejected, and this candle closed bearish. And from the weekly time frame, what I can see is this candle didn't really confirm a bearish change in state of delivery, but we had this candle closing below this bullish candle. I usually love to see when a change in state of delivery is confirmed, we have a down close candle closing below the consecutive two up close candles. So I don't know, I'm somewhere loud, but hopefully you can hear me. So what we can see is the market is currently not confirming yet a bearish change in state of delivery, but what we're seeing last week, we rallied higher, manipulated higher, then we expanded lower. This week, remember, we have 4 days to go before the market closes, and what I can see is we have this volume imbalance that the market currently is trading into. Then off that, we can maybe try to determine what is likely to happen, if we can continue going lower, or going lower, or the market might be reversing going higher. And therefore from the weekly also I do my refinement, where I have my previous week's high labeled, previous week's high. I've labeled there the previous week's high. If the market will be showing maybe bullish prices, that will be the first target before even the market rallies to the previous month's high. Same to the previous week's low, that will also be the next target if the market decides to drop lower. So we have the previous week's low there. Then since the weekly isn't that clear, I'll drop onto the daily time frame to see what the daily is actually doing. So from the daily time frame, what we can see, the market has been in a downtrend. We have been really in a downtrend. We have been sweeping liquidities. Then the market disrespecting bullish fair value gaps. As you can see, we have this bullish fair value gap disrespected. We have bearish fair value gaps respected. The market has been tanking lower. We pushed higher to this level. Then off that point we were dropping, and on Friday what we formed is a bearish engulfing candle. And what we can notice is the market opened lower, and what we are doing is we are pushing higher, and at this point in time we have a bullish fair value gap that has been disrespected. So this was the previous week's low. Yeah, there we have it labeled. The market will need to go through this previous week's low before the market rallies to the monthly low. So if I'm bearish, right, I'm favoring more of bearish, since we have a more bearish price action of the daily time frame. The weekly ain't clear, but the daily, I can see we have a change in state of delivery, because we have this down close candle closing below these consecutive 2 up close candles. We have messy price action, which is not really good. It's due to lots of volatility in these times where you've heard of tariffs from the US. I think the market is really volatile. That's why like the price is just opening maybe lower or higher, right? For DXY, I know this price opened higher, but for DXY for Euro USD we are opening lower, but that's not the main concern. Now want to identify if the market will be bearish. From what areas are we likely to expect a reversal? So I'll have this daily immediate rebalance labeled there. If so, have my daily immediate rebalance should be at the top, and ensure we have that. So I have my daily immediate rebalance, which will be a specific level to me to know whether to see how the market will react around this area. And if the market reacts and start displacing above this level, then we can maybe target this previous week's high, then see how price will react around this area, see if we can be heading higher for the previous month's high. But for now, this is the level I will be watching. And if we drop further to the 4-hour time frame, what you can notice is at that level we have a 4-hour fair value area, whereby we had price leg number 1, 2, 3. So around this price leg, where I refer to a fair value area, we have both buyers and sellers, meaning that area has been offered both buy side and also sell side. So if the market is likely to be bearish, then I don't want to see price disrespecting this fair value area. If price disrespect it and we start displacing higher, then we can expect to see the fair value area being taken. But since it's a bearish fair value area, what I will be watching for is maybe a push higher, engineer liquidities, then the market tap into that area. Then if we start forming fair value gaps going lower, then that's what I can engage with, because this is a balanced area, and we have a small fair value gap over there, so we might have a sting into that. But I will be patient to see whether price will react into this daily immediate rebalance, or so I can slash it with the 4-hour fair value area. So to me, this will be the key level I will be watching off, which if price start displacing lower, I will engage, and my first target will be this previous week's low. But also, if the market disrespects this fair value area and start displacing higher, I can expect to see the 4-hour fair value area high being taken. and around this point I will determine whether price will continue to that previous week's high. So that's what I'm expecting, favoring more of a bearish price action. And the context area, or the point at which I will decide, I will advise you to maybe react off, will be this immediate rebalance or the 4-hour fair value area. Until price has reached that point, don't react. Wait for price to reach that level, then decide to react. Look for whatever you're looking for. If price disrespects, starts displacing higher, then engage in bullish prices. But if price consolidates, then starts displacing lower, then wait for displacement with fair value gaps, then engage with price towards this previous week's low. That's what I'm expecting for this one. And I don't know whether we can look at DXY, but yeah, you ask over Euro USD. Those are my thoughts for Euro USD. And for DXY, all right, for DXY, let me show my charts clean. For DXY, what we can see is if we go to the monthly time frame, we have the monthly high. Remember, they are negatively correlated. If Euro USD should be dropping, then DXY should be going higher. And also we have the monthly low around that point in time. Then we drop to the weekly time frame. What we can see from the weekly time frame is price has been bullish. We did react into these fair value gaps. The market was respecting these weekly fair value gaps. So if we have a rectangle to mark up this fair value gap, what you can see is the wicks are doing the damage, but the bodies are telling the story. You can see price, the bodies are closing above the midpoint. When we see something like this, we know that the market has a bullish intention, because if the market was to be bearish, I could have wanted to see the market closing below the fair value gap, the consequent encroachment of that fair value gap. But that's not happening, meaning we have an intention that the market can be bullish. So from this is the weekly time frame. So what I also do is trying to refine. So this is the weekly low. Before the market rallies to the monthly low, we need to go through the previous week's low. And also before the market rallies to the previous monthly high, the market needs to go through the previous week's low. So those are the two levels that could attract the market going higher or lower. And we had this bearish fair value gap that has been mitigated. It's no longer valid. And now the weekly ain't really clear. We need to drop onto the daily time frame to see what price is telling us. So price, what price is telling us from the daily is we did have that drop. We swept all the liquidities resting below here. The market started displacing higher, forming bullish engulfing candles that led to other expansions higher. The market expanded, then we dropped lower. We have been dropping. The market did react off this fair value gap on we had a bearish fair value gap being created off this level, and on Thursday we tapped into it, rejected. Then on Friday, what price did is swept the previous day's low, expanded higher, and it closed bullish. Remember, a fair value gap's job is always as a catapult, right? A catapult whereby if you apply force to a catapult, then you release the stone, then the stone should really move very fast, right, towards the target. So towards whatever you are targeting. So a fair value gap acts as a catapult, right? Price thinks into it, then it should push price with force towards this low. But this fair value gap failed to do it because we had this nice rejection. Price failed to push price towards this low. But on Friday, we created a bullish engulfing candle. And whenever I see a bullish engulfing candle, I divide the bullish engulfing candle into 4. And what qualifies, how does a candle qualify to be a bullish engulfing candle. The bullish engulfing candle should, if it's a bullish one, we should sweep the previous candle's low, which we can see with this candle. We swept the previous candle's low and closed above the opening and the closing price of the previous candle. This is the previous candle. The opening is at this level, the closing at this level. But the engulfing candle swept the low of the previous candle and closed above the opening and the closing of that level of the previous candle, which qualify is to be it to be a bullish engulfing candle. And with a bullish engulfing candle, I usually have, if we are bullish, I'm expecting to see how price will react to the 0.25 level or the 0.5 level, right? And currently we can see price has already reacted or around the 0.25 level. We have created a daily immediate rebalance. We pushed higher, swept the previous day's high, and currently we are dropping. So of these, not really clear also, but with the bullish engulfing candle, I'm expecting to see higher pricing. But for now, we'll try to have more confirmations from what areas are we likely expecting to push higher, because I am really highly anticipating higher prices. We dropped to the 4-hour time frame, and from the 4-hour time frame, what we can see, price pushed higher. We had a nice drop. We swept liquidities, all these liquidities. Price displaced higher. We closed, or we had a formation of a 4-hour fair value area. So around this point in time, we had that formation of 4-hour fair value area, 4-hour fair value area, which now at this point in time we have reacted to it. We have this fair value gap deeper, but is it likely that we might be coming for this fair value gap around this point in time? Let's see, is it likely? To me, it's a low probability. So to me, that's a very low probability for me to see the market retrace deeper into this range, because inside this price action we have both buyers and sellers being involved. And so the area that we only have buyers is from the fair value area. We had prices pushing buyers, and now we have sellers retracing. And from this area, if I'm bullish, then I'm expecting to see reactions of this level. I'm not saying price can't come to this area, but to me it's very low probability. If we have this drop, I'll not want to get involved in any counter trading, because I'm bullish for DXY, bearish for EURUSD and GBP/USD. Then I don't want to involve in any counter trend. I want to see whether price reacts to this area nicely, then off those areas. If we have nice displacements going higher, then we can get involved going higher. So until that happens, until we have displacement, don't engage with price. So wait for price to tap into that your context area. If for example EURUSD, wait maybe for price to tap into this area, because we also have another gap. Then if you see displacement, then engage. If nothing happens, don't engage. So that's what I'm expecting. Hopefully you can get something off this video, and if you have any question, feel free to let me know, and I'll be here to answer it. So until next time guys, be safe.